assuming something did go wrong, but he just didn't want to reveal that to anybody. We looked each other in the face. We had a conversation about it. And I'm one of the few people that can look him in the face and cuss his ass out if it comes to that. And he'll stand right there and listen to me.
That is it, confirming that they are conducting what they're deeming law enforcement action, which could indicate search warrants being conducted there, could indicate arrests being conducted. We just don't know at this hour specifically what that law enforcement action is.
Ladies and gentlemen, chaos broke out. And I'm not talking about legit, bona fide boxing, pure boxing.
Stephen A. Smith spoke bluntly during his broadcast as he reacted to the shocking developments surrounding Floyd Mayweather. Reports suggesting that the boxing legend's assets have been frozen as part of a staggering $42 million fraud investigation sparked a strong response from the ESPN analyst. Staying true to his direct style, Smith delivered an intense commentary that grabbed attention across both sports and financial circles, criticizing Mayweather's extravagant way of living, his controversial business dealings, and the impact of long-term excessive spending.
Floyd Mayweather has made a lot of money in his career. It appears he also owes a lot of money too. The boxer apparently owes $22.2 million in taxes from 2015. According to ESPN, the tax balance was unpaid as recently as March 6th of this year.
As more information surrounding the controversy comes to light, Smith's pointed remarks reflected the shock shared by both supporters and skeptics, highlighting what many see as another turning point in the turbulent decline of one of boxing's most divisive personalities.
You know, kind of sold that. It was great marketing. He's not a boxer, but hey, he was a knockout artist in the UFC. I get it. John Gotti III, I don't know anything about him. I'm not trying to disrespect him. And yes, I'm being smart. I'm not trying to disrespect the grandson of a mobster. Fair enough. But what I'm trying to say is this. When you're great, when you're elite, not just anybody deserves to be in your pristine space. And what I mean by that is I'm not talking about on the street or anything like that. Boxing is your thing.
In October 2024, Floyd Mayweather revealed a major move into real estate, securing more than 60 multifamily properties in Upper Manhattan. The portfolio, valued at around $42 million, includes close to 1,000 rental units. The transaction involved Black Spruce Management, a well-established firm in New York's property market. The investment was presented as an effort to expand beyond his boxing career while also contributing to the availability of more affordable housing.
Ever. All right. Now, Floyd Mayweather Jr., there's a story circulating that Business Insider did talking about this $400 million property deal that he had been discussing here in New York City. But now, according to Business Insider, it's not what you think it is. They said there's no evidence there's been a sale of these properties, and it's 62 rental apartment buildings in Upper Manhattan. Here is what Floyd Mayweather had said at the time on a video that he posted on his Instagram.
I love bringing the people into my lifestyle, showing the people how I live. Now, I know you guys see me on a regular talking about real estate. Well, lately, I purchased 62 apartment buildings in New York City. And what I need you guys to do, slide over and check out the photos. It's not all 62 buildings, it's a few buildings, but guess what? All the buildings belong to me. I don't have no partners. And all the retail down low on my buildings all belong to me. Guess what? You can do the same.
All right. Well, now we're trying to figure out what happened, right, with Business Insider. So according to another update, he did ink a $402 million deal for a Black Spruce portfolio. When he said that it was all his and no one invested, he meant no one was funding his part of the investment but him. And so I think this is something where maybe he owns a piece of this or shares in it, but it hasn't changed hands because the majority owner is still the same owner that it was before. I'm trying to understand what happened with this, but I know there's a story that's circulating, so just putting it out there. Whew, it's a tough one. I'm trying to understand as a real estate person myself, what exactly he is communicating when he's saying that he owns this, because they're trying to make it seem like he doesn't, but what it seems like is that he owns shares of these buildings.
However, official property filings did not show a complete ownership transfer to Floyd Mayweather. Industry observers indicated that the arrangement may involve only a partial stake, possibly with provisions to increase his share later. In addition, his real estate company, Vita Properties, has yet to publicly disclose detailed information about the transaction.
Floyd, I hope the $402 million ain't left his bank account yet, then. I remember Floyd was on a talk show. I think 50 Cent posted that as well. And he said something like, you know, they say, if you know how much money you got, then you don't really got enough money. So they say, if you know how many buildings you got, then you ain't got enough buildings. Como? Who told you that? I hope your real estate broker or investor, whoever handles this real estate, I hope they ain't tell you that.
Adding further controversy, Floyd Mayweather acknowledged Jonah Rechnitz, who has a prior conviction tied to a federal corruption case, as an important ally in his business dealings. This connection has raised additional questions and increased attention on the credibility of his real estate ventures.
First investment was real estate, commercial real estate, skyscrapers actually. So what I did was this. It started off with $5 million. Put up $5 million, I was getting $50,000 a month. On every 18th, every month it was paying off. You like the cash flow? Yes, for years. So I said, okay, if it's paying off like this then, and I gave him 7 figures, I said, I'm not gonna even give him 8 figures. I went and gave him 9 figures. If it's something that I know is paying off, lucrative and heavy, I gotta go with it. Roll the dice, take a chance. You only got one life.
Floyd Mayweather Jr. recently responded to speculation claiming that his $42 million real estate move had caused financial strain. He maintained that he personally purchased 62 properties in Manhattan, emphasizing that the investment was made entirely with his own funds and without outside involvement. At the same time, he faced a major legal blow when a U.S. appellate court upheld a decision ordering him to pay $2.4 million to Nigerian company Zini Media Concept Limited. The case stems from a 2017 deal in which Mayweather agreed to appear at events in Africa, including Nigeria. According to the agreement, he did not meet those obligations and also failed to return the advance payment. After repeated efforts to recover the money proved unsuccessful, Zini Media pursued legal action, accusing him of breaching the contract, benefiting unfairly, and engaging in fraudulent conduct.
Former world boxing champion Floyd Mayweather is returning to the ring this weekend after his recent retirement. Mayweather will be up against Don Moore in an exhibition fight at the prestigious Burj Al Arab Hotel in Dubai. Since retiring with a perfect record of 50 wins and no loss, Mayweather has been putting up exhibition fights for his fans' entertainment. Both men are in Nigeria to promote their upcoming exhibition fight. This is Mayweather's first visit to Nigeria, where he hopes to set up several facilities, including boxing fitness gyms.
It's in Nigeria.
Action packed.
May 14th is the day. Pay-per-view action packed, and I'm talking about don't blink, don't get no popcorn, don't do none of that. I'm ready as if the fight was tomorrow. So I'm ready to go, you know. I'm definitely going to put on an amazing performance that no one has ever seen, both the ones that know me and don't know me. I'm dangerous Don Moore, and I've never been defeated for a reason.
Don Moore is such an amazing guy, an amazing fighter. Unbelievable. He's 18-0. He comes from a great team. His pedigree of boxing is amazing. And May 14th, we're going to go out there and entertain the people and give the people around the world what they want to see, especially the people in Nigeria.
Mayweather's financial concerns also include claims of outstanding debts. In one case, a Las Vegas jewelry business filed a lawsuit alleging he owed $1.4 million for a diamond-covered necklace. According to the complaint, he made some payments, but did not clear the full amount in a separate legal matter. He and rapper Tyga were both named in a $4 million lawsuit tied to luxury watches and jewelry. The claim stated that Mayweather displayed the high-end pieces in public, while the remaining payments had not been completed.
Arnold Schwarzenegger, limited edition AP, all factory, 1.8 million right here. The $20 bills section, we like to call this the Andrew Jackson section, but I like to call it wallpaper, 200,000 in 20s. I heard in the song you can get the biggest Chanel bag in the store if you want it. Well, it's the biggest Chanel bag in the world. I got this bag from Karl Lagerfeld, R.I.P., may he rest in peace. Money getting motherfucker like myself, always showing out, always talking shit. Like 1.8 million, you know how it is. Check it out. Let them know it's all hundreds. Money made all motherfucking day.
In a more recent development, Mayweather backed the launch of a new digital token alongside Sahil Aurora, an individual connected to multiple celebrity-driven cryptocurrency controversies. Blockchain analyst Zach XBT drew attention to the partnership, pointing out Mayweather's alleged links to at least 3 separate crypto rug pull cases, situations where project creators withdraw after collecting investor funds. This recurring involvement in dubious crypto promotions has intensified concerns about his possible role in misleading or risky ventures.
Mr. I don't lose at nothing is back.
Correction, Mr. just got unbanned from scamming is back. This time, he's selling NFTs. Now, I'm going to tell you guys this is an obvious scam if you can just read the signs, but since Floyd can't read, I'm going to explain it to you all by telling you the history of Floyd Money Mayweather and crypto. Our story starts in 2018 when Floyd Mayweather was banned for 3 years from promoting securities after scamming his fans with an ICO called Cintratec. He was promoting tons of these ICO scams at the time, and he also narrowly avoided an ICO fraud lawsuit for the same thing under the defense that he wasn't actually influential enough to convince people to buy the scam. And now that it's 2022, his 3-year securities ban is over and he's back to scamming again. He's currently being sued once again for his promotion of Ethereum Max alongside Kim Kardashian, and also has gotten really into NFTs.
And if you in the NFT world and you betting on me, you will never lose. But what I need you to do right now, go get Mayweather. That's my new NFT. I've been working on that for months. If I win, you win.
Now, it's pretty obvious from these comments that Floyd has learned nothing after not reading the SEC settlement. So maybe that's why he tells us we can't lose by betting on it. So let's put that to the test with his last 3 NFT projects.
I'm dropping my NFT tonight. FloydNFT.com, August 10th. Go get it right now.
Mayweather's role in promoting the cryptocurrency Ethereum Max has also drawn criticism. He, along with several other high-profile figures, became part of a class action lawsuit that accused them of giving deceptive and misleading endorsements to investors. The case argued that these promotions contributed to heavy financial losses after the token's value sharply declined.
A California judge has dismissed a lawsuit against reality star Kim Kardashian, boxer Floyd Mayweather, and other celebrities over their cryptocurrency endorsements. Investors in the Ethereum Max, which is not affiliated with the popular Ethereum token, filed the suit back in January. So this suit claims celebrities conspired with Ethereum Max to promote the token to boost its value so company executives could profit by selling the holdings. The judge said the lawsuit raised legitimate concerns. However, he dismissed the suit because it didn't say where, when, or even if the plaintiffs had seen these promotions.
ESPN analyst Stephen A. Smith has been vocal about Mayweather's financial predicaments. In a recent segment, Smith criticized Mayweather's lavish lifestyle and financial decisions, stating, "He's done."
Beyond the glitz and glamour, the flossing, the pomp and circumstances surrounding everything that culminated in Saturday night's Mayweather versus McGregor fight, there were a few sightings that were relatively low-key in comparison, but more significant than many may realize. At the weigh-in, there was a 2-time NBA champion Draymond Green and star guard Paul George. On fight night, of course, there was LeBron James, James Harden, Isaiah Thomas, and a few others. And none of them were there just to pay homage to Mayweather, the fighter. It's the businessman in Mayweather.
ESPN analyst Stephen A. Smith has openly addressed Mayweather's financial situation in a recent segment. Delivering a blunt assessment, he questioned Mayweather's spending habits and business choices, ultimately concluding with a stark remark that his run is effectively over. Smith stressed that Mayweather's current troubles stem largely from extravagant spending and mismanagement of his finances. His commentary underscores the wider challenge of financial literacy and accountability among top-earning athletes. According to Smith, recent filings reveal that Mayweather still owes more than $52 million in back taxes covering the years 2015 through 2022. The IRS has reportedly started freezing certain accounts and is actively investigating his assets.
Beyond the glitz and glamour, the flossing, the pomp and circumstances surrounding everything that culminated in Saturday night's Mayweather versus McGregor fight, there were a few sightings that were relatively low-key in comparison, but more significant than many may realize. At the weigh-in, there was a two-time NBA champion, Draymond Green, and star guard Paul George. On fight night, of course, there was LeBron James, James Harden, Isaiah Thomas, and a few others. And none of them were there just to pay homage to Mayweather, the fighter. It's the businessman in Mayweather they actually love even more. As the sun clearly set on the boxing career of Mayweather, many can reflect on a lot of things about the man. He wasn't a Mike Tyson-like knockout artist, or even Tommy the Hitman Hearns. To many, he wasn't even Sugar Ray Leonard. He certainly can't be confused with Muhammad Ali or any other fighter who's ever been socially conscious. No doubt he was guilty of domestic violence, as our very own The Undefeated accurately pointed out. He definitely had his share of boring fights that didn't give the people what they actually wanted to see. But that ain't the legacy these athletes are paying attention to.
Throughout his career, Mayweather competed in some of boxing's most profitable bouts. His 2015 fight against Manny Pacquiao brought in more than $600 million. And 2 years later, his matchup with UFC star Conor McGregor added around $300 million to his earnings. Forbes even recognized him as the highest-paid athlete globally at one point. Yet, as Stephen A. Smith bluntly put it, no matter how much you earn, it won't last if you spend as though the money will never end.
Mayweather's lifestyle wasn't just about luxury, it was about excess on a level rarely seen, even among the world's wealthiest athletes. His spending habits became part of his brand, with every purchase and post designed to remind the world that he was indeed Money Mayweather. From hopping onto private jets like they were taxis to driving around in fleets of Bugattis and Rolls-Royces, he showcased a life of unfiltered opulence.
Why fight Logan Paul?
Name another boxer besides myself that's more famous than Logan Paul.
Tyson Fury?
What? I want you to look up Tyson Fury, how many followers, and look up how many followers Logan Paul has.
Logan Paul, 56 million. Tyson Fury, 4 million.
So 50 compared to 4 something. I can fight a fighter right now, guarantee myself 35 million. Or me and Logan Paul can go out and entertain and have fun and make 100 million or more. So if you were me, you gotta look at 35 million for 12 rounds and 100 for 6 rounds. Big difference.
Mayweather's life extended far beyond mere luxury. It was a display of extravagance few athletes have ever matched. His spending became a defining feature of his persona, with each acquisition and social media post reinforcing his Money Mayweather image. From boarding private jets as if they were everyday transportation to cruising in collections of Bugattis and Rolls-Royces, he made a public spectacle of unmatched wealth and indulgence.
Floyd Mayweather fought another exhibition against Gotti last Saturday. A real the crowd booing in the arena at the end. But in the middle of the second round, Floyd literally had the referee swapped out. He didn't like that the referee told him to stop hitting behind the head. Floyd is used to having the refs do whatever he wants, and he wasn't getting his way this time. It was so embarrassing. Floyd, you're 50 years old. You're a legend in the sport. I've stood up for you in countless interviews, including Shannon Sharp's podcast last week. But you have to stop embarrassing yourself with these exhibitions. I know life is hard. I know life is expensive. But come on, dude, put your legacy first. Nobody wants to remember you like this. And it gets worse. Your jeweler filed a lawsuit against you in Miami. And many are saying you're gonna have to sell off your assets. I hate seeing this happen, bro.
On a heated episode of First Take, Stephen A. Smith delivered a no-holds-barred assessment. I've seen the documents. I've talked to the sources. I'm telling you, Floyd Mayweather is in serious trouble, he said, locking eyes with the camera in his trademark style. He added, "This isn't just speculation anymore. The IRS is after him. Creditors are on his case. He's selling off assets left and right. And worst of all, the fight money he once relied on isn't there to save him. The scrutiny didn't stop with analysts. Boxing icon Oscar de la Hoya, who has often criticized Mayweather, weighed in publicly. With a mix of humor and candor, de la Hoya chuckled at Mayweather's ongoing participation in exhibition fights, hinting that it might be time for him to step back.
Turns out that the rumors were true and Floyd Mayweather has been trapped in Dubai for the last 50 days. Gervonta Davis was the first to claim it. Now multiple insider sources have confirmed that he is in fact trapped in Dubai for a debt that has nothing to do with boxing. After doing a little digging, it seems that someone in his camp while he was shopping for jewelry in Dubai stole one of the pieces, got away with it, and then blocked all communication with Mayweather. Since then, Floyd has already paid for the jewelry, but they refuse to let him go until they get their piece back. And allegedly, this guy right here is the thief that started this whole mess.
What are your thoughts on Stephen A. Smith's fiery comments about Floyd Mayweather's alleged real estate fraud? Drop your opinions, theories, and hot takes in the comments below.
Floyd Mayweather Jr.'s ongoing legal and financial issues highlight a clear lesson about the importance of careful money management and personal accountability. While his accomplishments inside the boxing ring are indisputable, the difficulties he faces with post-retirement business ventures illustrate the challenges high-profile athletes encounter in handling both wealth and public reputation. Stephen A. Smith's remarks are certainly intense and unapologetically direct. By focusing on Mayweather's alleged real estate troubles, he's highlighting how even massive wealth can't protect someone from the fallout of risky investments and poor financial oversight.